Hello traders, welcome back. Today is the 22nd of December. My name is Neville Hornsey, market analyst for YouTrading, and today I'll be taking a look at the euro versus the US dollar. Okay, so we're looking at the daily chart of the euro versus the US dollar. Now, the euro is the most widely traded product in the Forex assets, and we can see that it's been going sideways around the 1.13. It's kind of just coiling around this, making a little low here to a high there. So quite frustrating at the moment, and it's just going sideways. Now, we can go higher, we can go lower, or we can go sideways. So the next move, I'm just going to try and work out which way it's going to go. To do that, we're going to go to the weekly chart. So if we just use the zigzag tool, eagle-eyed traders will be able to see that we're now using TradingView charts within the Active Trader platform. So you'll be able to follow along with this. So we've got a swing high here in 2014 down to a swing low in 2015. So a big impulsive move after prices rejected the 1.4 big figure. So if I just type that in here, 1.4, and they came down to the lows of 2015 here. Then we can see that we had an area of balance where they accumulated some buyers by looks of it. So we had this low to this high and then traded within that range until Brexit 2016 popped out the bottom, swept the lows, and then this became our next significant low. We'll just get rid of the zigzag tool now. If we go to the daily chart again, we can see that up here, that was a significant swing high, the next significant swing low. So that was one zone. And if we come back down here, significant low to the next significant swing high. So we had a low, a high, a higher low, higher high, change in trend back into the middle of this balance area. Obviously, the zone down here was an accumulation of buyers. They had enough power to get higher. We saw a move up until we got towards the 1.25. So if I just put that there, 1.25. Then we had a rejection of that, came back down to 1.13, traded sideways, again into this sort of area here, obviously well traded during 2015 to 2016. And you see prices during COVID, so this is like a COVID spike high to the lows, March 2020, right into the middle of this accumulation zone here, before traveling back up towards the 1.25 again, but not quite getting there. Got towards the 1.23 and then rejected, started making significant swing lows and lower highs. So currently prices in a momentum to the downside. If we just go back to this swing high here, so we had this swing high to that swing low there, and almost to the tick, that's when 2021 prices, the highs, got into the middle of that distribution zone here. So this is obviously where sellers were abundant. Still there in 2021. It came back down, confirmed that they're there before moving down to this 1.13. So momentum's to the downside, price actions to the downside. We're currently traveling more towards this zone here of accumulation and buyers. If I just zoom in here, so in March 2020, we had the lows to this swing high here. So there is a chance that these buyers that were present here during the sort of the worst of times are still there. So we could get a move down to the 1.089. So we'll just put that there. In fact, I might make that green as well so we can differentiate it. So at the moment, like I said, I think momentum's to the downside overall. There are some buyers down here, as history has shown. There could be some new buyers from 2020 down here towards the 1.089 to 1.09. But if we look to the left, we've got this impulsive move up from this accumulation zone here. So we had an impulsive move, then a correction. So an area of balance formed there. So if I just put that box around that before another impulsive move. So there was obviously some buyers accumulating here before they impulsively moved higher again, until we got to this area of balance before the move that I've just mentioned before. So looking left, we're trading within here. So there's obviously buyers there before. And if I go from high to the low, you see prices basically trading right in the middle of that now and hasn't broken to the downside of that. So if we were to see momentum continue to the downside, it would mean that the sellers had overwhelmed any buyers that were here before. So obviously these are going to be weaker than these guys maybe. So I'd be waiting to see if we could get, through that low all the way down to here. So that would be the easiest trade for me, I think. Momentum to the downside, price actions to the downside. It's quite easy for sellers to overwhelm any buyers that were back in, a year before. And then I'll be looking to target these lows here. However, obviously, if there were buyers there once, they could be there again. So we could be looking for a move to the upside, in which case we'd need to see a breakout of this level here. But then we run straight into this area of balance. So to the upside, it's definitely not as easy as going lower because just the risk reward doesn't make sense. So for us to get long, we'd need to see, anyone that was selling here get overwhelmed and then break to the upside. So their stops are probably going to be above this swing high here, so around 1.17. And then the next guys who are short will have their stops up there. So if we were to get through that swing high, then these guys up here would become a bit more nervous and they might collapse their short trades, which would then accelerate prices to the upside, in which case we would see something like this, where we have like a breakout of this balance area, hopefully a retest, and then a continuation up to where sellers have been before. So for now, I think the momentum's to the downside. The easiest trade would be to the downside, but I'm conscious of the fact that if we get above 1.14, then we're running into old support, which would become new resistance. And like you see here, we had essentially a move high, then a breakdown through that low, then a classic retest up to that low, which acted as resistance before the move down. So, we're just could be doing that again. We could find that this is old support becomes resistance. So there is a tendency to sort of see price come back down. But the easiest trade for me would be to the downside. So that's kind of what I'm gunning for. I hope that makes sense, and I'll speak to you again soon.